Hi, welcome to the Market Alert for Friday, the 15th of April 2016. Starting off yesterday, of course, the market doing its best to move higher at the moment, and we saw yesterday, despite there not being too much economic news to move the market, in fact, I don't think there was really any apart from Fisher speaking at 3 p.m. We see the market moving to the upside, which is a given, of course, when they wheel out any Fed member. And then we see the market stumbling at 17,950, which is quite hard to believe, really, that the market's gone back this far. We're only 50 points off the 18,000, and then through that we go to the all-time high, which we saw last May, and I'll show you that in just a moment. So later on we see a sell signal at this level, and this fails. The 20-odd points made on this trade are given back here. We can see the range is only 50 points for yesterday, so small losses as well, and then we end up with 20 points back as well, and then there are no other signals because the market was getting close to the end of its session. So in the daily chart, which is difficult to see, I'll just spread the bars out just a little bit so we can get a clearer picture there. At the moment we're through the 17,950. Next upside target is the 18,137, which is the high for July of last year before things came tumbling down in August. And then we have the all-time high at 18,364, which was for May of last year. So the market heading back in that direction at the moment. Will it go there? I don't know. You can certainly see here the volume has dropped off in the last couple of days as the market's tried to move higher. All of the high volume bars here, apart from this bar, have been on down days. There is massive downside pressure in this market, and there is also massive manipulation. This is a rigged game. It's a central bank rigged game, which is worse than all of the other manipulation we've seen over the years. I'm just going to show you a few. Let's start off with Barclays being fined for 26 million for traders rigging the gold price. You see, everything is possible to be rigged. Global banks admit guilt in Forex probe, nearly 6 billion. Telegraph, serious fraud office boss gets a job for 2 more years despite the LIBOR case failure because the bankers were rigging the LIBOR rate. Yesterday, Deutsche Bank came out at last. I've been talking about this to close friends, family for an awful long time, that this is the biggest rigged market on the globe. The next culprits are going to be JP Morgan. There's only 4 or 5 banks who set the price of silver. And as you'll see in this one that also came out yesterday, Deutsche Bank also guilty of rigging the gold price as well as the silver price. And it is now prepared to actually expose the other manipulators. And one of those, well, it can only be those that's actually set the price on a daily basis. And there's 4 or 5 banks that do it: HSBC, Nova Scotia, JP Morgan, and the other 2 escape me at the moment. It doesn't matter. Oh, well, Deutsche Bank obviously was one, and I can't remember the 5th one. But at the end of the day, I wouldn't be at all surprised because there's some very good articles and videos and documentaries on YouTube about JP Morgan's manipulation of the silver market by selling futures into the market, the paper market, on the overnight and suppressing prices. So when the lid comes off all of this now, hopefully gold and silver will be able to move higher, and it actually has moved 20% higher plus since the beginning of the year. And it is also not just seen as a monetary commodity, but also it's a measure of confidence. And because the central banks are losing credibility now, and the bankers as a whole, there is a flight to the gold market. And also, if you do the research, you'll find that central banks have been buying gold more so than ever since 1964 in the last few years. And one of those is China, been buying over 10 tons of gold per week to build up its reserves. And as Peter Schiff said, at the end of the day, he who owns the gold will be able to set the price when this lot comes crumbling down. And it is going to come crumbling down because you can see the cracks appearing all over the place. And these are just a few of the rigged, manipulated and markets by the bankers. There are no scruples, no conscience. And as long as it makes them a bonus and a few quid, they don't really care. I'm not saying that for all bankers, of course, but there is certainly something that is endemic within the banking system that allows these people to do this thing. And the biggest culprit of all is now the central banks trying to control the whole market. And I'll go into this in more detail in another market overview to show you why this is the case and why we're on the cusp of a major fall in this market if we get back towards those highs. The market's tired. It's been manipulated all the way up from the February lows, and it shouldn't even be here. The earnings don't match it. The economic data doesn't match it. Even the Atlanta Fed downgraded the GDP figures just 2 days ago. So how on earth this market is staying at these levels can only be one thing, and that's the Federal Reserve. On the implied volatility, 1123, and again you can see this is a beautiful picture that's setting up here. If we can get the implied volatility just down towards the 10% area, that would be magical, because you've got a market that's gone back to the May highs of last year. The implied volatility is back at record lows. The blue line already is. This is setting up for one really good move to the downside. Let's say that, put it that way. So a very interesting time coming, whether it's in the next couple of weeks or next month. But certainly, I'm still holding to. Hopefully this thing will start falling apart in April, but if not, certainly in May. The old adage, sell in May, go away. We should start to see this all come tumbling down. News-wise, which I forgot to look at earlier, we've got nothing really today. It's again a bit of a quiet day. We've got the prelim UOM consumer sentiment at 3 p.m. It's a high impact news item. 91 is the forecast. Anything to move the market higher if this comes out. So if the consumer sentiment is looking good, then the market will use this to move higher. There's also G20 meeting today, stretches over the weekend, and also OPEC a meeting in Doha to fiddle the crude oil figures as well, and also to pump out a few rumours to send the price of crude oil to the upside, which you can see there as well. This has been moving higher for the last week and more sideways for the last few days, but you can see the crude oil up again, which is the reason, or one of the other reasons and excuses, that the Dow has moved higher also. Right, that's it for today. I will see you in Monday, so I'll record over the weekend. I'll let you know if anything else happens in between. Other than that, have a great weekend, and thanks for your support, also for watching. See you in the next one.